Hello, everyone. This is Simon with AvaTrade, and I want to welcome everyone. And of course, I'd like to say a Happy New Year to everyone. And I wish everyone, your families, and people close to you a happy and healthy New Year. May we all be healthy, um, happy, and I hope that this year will bring more peace to the world and more positive things to all of us. So we're starting our year, and this is the first webinar of the year. And for new people, just to explain into words, the idea of the webinar is, as it says in the title, we're trying to make a plan for the week. So we're trying to create the structure, go through some fundamentals, technicals, and make a plan. As having a plan doesn't bring guaranteed results, but definitely brings less chaos and impulsivity to our trading, which potentially could bring better results. A few things about myself. This is me, Simon Friedman. I'm a senior account manager with AvaTrade, and my overall experience is more than 22 years in trading. I started in New York in June of 2000 as a proprietary trader, and I did it for about 11 years. And after that, I moved away from active day trading and started also to mentor and educate other traders. And currently, I'm very happy to work with our customers at AvaTrade, and I'm trying to share my experience, my knowledge as much as I can, and try to help people become better traders. The agenda of the webinar is pretty much the same. We look through indices, stocks, commodities, and Forex, and before that, we try to see the big picture, what's happening. These are the channels that we have. You're more than welcome to subscribe or follow us on Telegram, Twitter, and YouTube has a tremendous amount of information there. We adding daily more information, more tutorials, more educational material, including the webinars. And I know some of you are not able to attend live webinars, so you can always find recordings on YouTube. You can subscribe, you can click on that bell, and you'll be notified when new things are being added. And of course, the risk warning, you can find the full statement at avatrade.com website. And everything we do is purely educational here. Now, I took this nice snapshot of the picture, and it says a look back in financial markets in 2022. It's been a tough year. Some people were happy making money, shorting the market. Others were not, getting stuck in their buy positions. Even for those shorting the market, it wasn't easy as well, because the market didn't really just go straight down. There were pullbacks, there were fake rallies, and so on. So the year is over, and we're starting a new year, 2023. And just to remind you, on Monday, most of the markets will be closed for the New Year's, even though New Year is on Sunday, but because of that, they took another holiday, another day off on Monday. So full-scale trading is going to resume on Tuesday. So Monday, it's not going to be much going on. Forex is going to be trading. Some other markets are going to be trading, but major markets, including the old U.S. markets, are not going to be trading on Monday. So just to summarize the year, if you take general numbers of U.S. indices, S&P fell 19.2% for the year 2022. And according to Dow Jones market data, this is the fourth worst annual decline since its official inception in 1957. Interesting. I didn't know that S&P was kind of formed or created, the index itself, in 1957. So you see, we learn every day. So S&P lost 19.4%. Dow Jones lost only 8.8%, and it was saved by the rally. And the last quarter was very good for Dow Jones. It had a rally of about 15.4%. So it made a huge difference. So overall, it lost 8.8%. And the biggest loser, of course, NASDAQ. It lost in the year 2022, 33%. So if you take all of them, it was the worst year since 2008. If you remember 2008, I'm not sure if most of you were trading back then, but definitely you felt the crisis was there. It was a global crisis, and it's kind of started in the U.S. with real estate and everything else. So here we are. We finished the year. We're starting the new year, and it's going to be interesting. We definitely will be watching the Feds, what they're doing next. We'll be watching the possible recession, even though some already say we are technically in recession for a while. So let's see what markets are going to be doing. Now, let's move to economic calendar, and we start talking about the first week of the year. And the main two announcements in the upcoming week is going to be the FOMC minutes right here on Wednesday. And this is the GMT time. And just again, before I go further, economic calendar, it's important for me to mention, as I do every webinar, for the trader to be aware of things happening. It's very, very important. Whether you believe in these announcements or you don't believe in them, but I think knowing and being aware of certain things coming out is very important, so you don't get caught by surprise in certain moves on the market, especially big moves like NFPs or interest rate decisions or FOMC announcements and so on. So just important to mention that. So the two, like I said, the two most important announcements are going to be FOMC here on Wednesday and non-farm payrolls on Friday. As Friday, just to remind you, usually it's the first Friday of the month, and we have NFP numbers, non-farm payrolls, showing how many jobs we're adding, and also unemployment figures and other details. So Tuesday, we have CPI numbers from Germany, manufacturing PMI on Wednesday together with FOMC from the States. ADP employment, it shows kind of preliminary numbers by the different agencies, so it just gives an idea of possible results on NFPs. Then we have retail sales from Germany, CPI numbers from European Union, retail sales here, non-farm payrolls, as we said, and employment data also from Canada, and service PMI from US. So these are the things, and again, FOMC and NFP numbers are the most important. And of course, we're entering the earnings season. The companies will start reporting earnings for the fourth quarter, and we'll be talking about it in upcoming weeks. Maybe we'll bring a few specific stocks to talk about. Okay, let's move on to MT4 terminal, and then we'll start with indices just to show what we just spoke about. This is the year we started with the falling market hitting the top. It was right in January, and we just kept on sliding. As you can see, this is the weekly chart. We kept on making lower lows and lower highs, and we closed not at the lowest point of the year. The lowest point of the year was back in October, and then we tried to run, and then we kind of give away roughly 50% of this last move to the upside. So, and then the week closed pretty much flat where it opened. That's S&Ps. Dow Jones had a nice move towards the end of the year, but then of course it went down together with all the markets, and sitting also flat. The last week was flat, pretty much all the indices, including Nasdaq. Nasdaq was the weakest, and Nasdaq, as you could see, tried actually making the new low for the year. It still closed a little bit above of the low of the year, and again, that was the same thing. The week of October 9th, that was the low of Nasdaq, and that was about 10,000, 10,500, and then we closed around 11,000. So these are the indices. Now, how we're going to start this year, we'll see. I think in this data of FOMC minutes and NFPs will actually add more clarity or more details for the Feds for their future or upcoming actions as far as interest rate excuse me, and monetary policies. So that's as far as the US indices. Now, China, as you know, I've been talking about China pretty much every session. China had a nice run when they start talking about easing the COVID restrictions. Then the panic came in because the infections grew, went down. Then another round of easing came in and so on. And we spoke about this, you remember, we spoke about this level around 12,900. We are currently above that. If you take a look at the weekly chart, this level, it's a very serious level. If we are holding about it and we see some positive things from China, we might see actually index continuing recovering from this pretty much steep fall. And as you know, with China, I like to bring two instruments, copper and oil. So copper, it was very sensitive to Chinese index, as you could see. The last week of the last year of 2022, we had tried to run up, we failed. And if you remember, I mentioned this level of resistance, we almost hit it to the penny and then went down. So let's see what China is going to be doing, and based on that, copper will be acting accordingly. And oil also, a lot of the reasons for oil to follow, there were talks about recession and definitely shrinkage of demand coming with that, and that also on the China recovery, it moved a little bit higher, and it did close the year on the up day, and we are facing resistance on 50-day moving 50-day moving average. So let's see what's next. We closed around $80, 80 and a half, 80.45. And again, I didn't mention in the beginning, but the war, Russia-Ukraine going on, a lot of it affecting energy, that includes oil and natural gas. So that's from a geopolitical point of view. Let's see how this, I hope this year will bring peace and the end of this crazy war. It's not good for anybody, any war. It's not good for anybody. We know that. And just wanted to mention that. So that's as far as crude oil. And that's crude oil and copper, again, connecting to China. Let's take a look at some European indices. DAX closed the last day of the year, closing below the previous day. It is a downside pressure there, and we are trading in this channel on DAX between 12,900 and 14,600. We are, this is the weekly time frame. We are about the 50-week moving average, and if you take a look on daily chart, we broke below the 50-day moving average, and we are kind of trying to break through this support that so far we've been holding. Let's see what the year, what the beginning of the year brings. FTSE, the UK index, try to see the big picture. We tried, we never managed to break through the highs of 2020. As you could see, this is the weekly chart. We had many attempts. We came all the way here. We faced the same resistance again and again. and we did it again at the end of November. So if you're talking about the upside, we would need to break this level around 76.30, and we are sitting on the weekly chart above the averages. So that's on FTSE. And Nifty, the Indian index finally in the past few weeks broke through the support that just built up recently. There was a resistance that we couldn't break back in October 10th, the week of October 10th, and now we're trading below. And if we are staying here below, not really managing to go above, we might continue sliding and maybe try to test moving averages. There you could see it's really on the daily chart, as that resistance was created here by few attempts, and now we're going lower. And as you could see on daily chart, the reversal, it looks like it's succeeding. You can see the lower lows and lower highs, so maybe the trend is changing to the downtrend here. That's as far as indices. Now, commodities, we already spoke about oil and copper. Natural gas is next on the list. It's been really selling, and what I've heard, there's some predictions of the warmer weather, and everybody was hoping. I think what happened here is a failure of the natural gas to move higher with the storm that happened in the US. As you know, that was a deadly storm, and some traders were expecting the prices to go higher, and it was a big disappointment here. So you could see 4 straight days to the downside of natural gas. Now, of course, like I mentioned, the Russia-Ukraine war is, or the Russians' manipulation, it's affecting natural gas as well. But technically speaking, we're at a very interesting level here. So you could see this big rally started back in March of 2022. And before that, we kept on hitting the same support for about 4 consecutive weeks. Take a look. February 20, 27, March 6, and March 13. We pretty much hit the same level. And that was around $4.42, 43 cents. We closed at that level again. So, of course, 2 things can happen. This level could hold, and most likely, again, I'm not here to make predictions, it's just pure logic. If they couldn't break it to the downside in 4 weeks, that means there's some serious buyers were sitting here, and history tend to repeat themselves. So it could be that those buyers are serious and they're sitting there at these levels, and we might be facing very strong support. So that's one scenario. Another one, we can just break straight through, and those people that think like me and you that might get disappointed and turn to sellers, and we might actually break through and maybe go and test $4. That's another serious level around $4 while we're building that momentum to the move to the upside. In any event, it's going to be a fight here for the current level here at around $4.42. So it's going to be very interesting to watch. Natural gas definitely is going to be on our list to watch for this upcoming week. Now, gold. Gold, finally, this is the weekly chart. We finally closed above that 1800 level. We couldn't do it for a while, so you could see resistance here caused a lower low. From here, we climbed back to that level. We tried, we had few serious tails here, but we never managed to close about that 1800 or 1803. And this last week of the year, we did actually manage to close, and that could be a signal or the beginning of continuation to the upside. And of course, if we come right back and close below that level, this disappointment might cause a sell-off and possible continuation to the downside. This is the weekly chart, right? On the daily chart, you could see it nicely here. This fight was very strong for this strategic level, and finally we broke and closed above that. So that's as far as gold. We spoke also about palladium. We spoke about palladium around these levels. We did move higher, and we are holding this level so far. Also, a lot of spikes up and down on palladium, and we are holding this 1800 kind of up and down, but the level is holding here. So let's see what's coming in upcoming year. Now, soft commodities, we spoke about them last week. This is wheat. We are facing the 50 moving average and also the resistance here. Let's see if we manage to move higher from these levels. Corn had a nice move recently. We broke through this recent resistance and closed higher. We're holding also, might be seeing continuation to the upside, or the opposite, we can come and close below the level and then slide lower again. And soybeans were, out of three, the strongest out of corn, wheat, and soybeans were stronger here. We're on the way to retest the 200 moving average. So you could see there was a nice move to the upside. And if you remember, I mentioned that because of that storm, we might see that weather affecting the soft commodities, and it looks like it worked there. So that's as far as commodities, I think. Another, I just forgot to mention, we'll go to the currencies in a moment, but one of the indices, Nikkei, has been selling off the moment the yen start gaining value, because it's similar to the reason why US indices went down for the strong dollar. So the Japanese index starts selling heavily the moment the yen increase in value. So just wanted to mention that. And let's start, or let's move to Forex world, and we'll start with dollar index. Dollar index has been giving a lot of gains, as you could see. The peak of dollar index was in September, the week of September 25th. And from that, we are pretty much selling. On the weekly chart, we are below the 50 moving average. And currently, if you look at the daily chart, we are currently fighting this recent support. The low here was 103.06. So let's see, 103. They're trying to push it below that level. And if that happens, this was the level here, 103.04, and that was the week of December 11th. And if we break that level, we might actually slide lower to 102, even 101, and see what's next. Just to remind you, this 103.80 level, I set it up against this resistance here that happened the first month of pandemic in 2020. So definitely we'll be watching what dollar index is doing. This week FOMC meeting and NFPs are going to give us some kind of a clue how Feds will be reacting in the near future. So that's dollar index. Now we'll start with dollar yen. If you look at majors, and that's what I mentioned to you, dollar's been selling in general, and yen's been getting strong. So the sell-off happened from these levels back on October 21st, the week of the day. That's actually daily chart. October 21st was the peak, and since then we've been really in the downtrend, clearly zigzagging, lower lows, lower highs, and now we came to retest this recent low. Let's take a look at the number. This was the big range day, and that was on the 20th of December. And the low here was 130.56. We're about 50 pips away from that number. And let's see if we manage to hold it, or if we break that, we might slide lower. I think I mentioned last week one of the officials, Japanese officials, was saying that he expects the dollar yen to be at 120. That was his idea. And so far, we're going lower here. And one thing that I see also here, take a look at the 50 moving average crossed 100 a while ago, and now we're about to cross the 200 moving average. So that's also technically, the analysts are looking to it as a strong bearish signal. So we might be seeing continuation to the downside, but we'll see first how we really react to that initial move that happened on the 20th of December. Again, the low here was 130.56. That's on yen. Now, if you take a look at majors, they are at the serious breakout levels. We might break out here. There was a lot of accumulation here. So if we do continue, if dollar get weaker, and if we do continue, that could create a nice impulse because a lot of instrument was accumulated here. And if the opposite happens, that disappointment could cause a nice impulse to the downside because all these buyers are potentially having some stops around these levels, and those stops will trigger and accelerate the move to the downside. So again, after a strong accumulation, the big move is coming. The question is which way, and we'll find out soon. Pound has been struggling, even though the dollar has been weaker, but the pound didn't really show a strong signs of strength. That sounds funny, but that's what it is, yes. We had resistance here, just looking at the chart back in August. We couldn't break it. We made a loss with the dollar strength, with the Feds moving aggressively. Then we had a nice recovery to this level. We reached that level in the beginning of December. And we also struggled. In the final, we broke through it. And then the sell-off came in the mid-December, exactly December 15. And since then, the pound is really struggling. It's not really selling, but it doesn't show any strength. And in general, UK, it's really struggling there economically. They're not doing great. Also, as far as Brexit, some opinions around UK, some say that Brexit was a mistake. Some ideas are popping up that maybe they should just go back to European Union. Just, I don't know, are those rumors or facts? I'm not sure, but there is information that those things are happening. Australian dollar. As you could see, all the major indices are trying to move. Sorry, not the major indices, the major currencies trying to move against the dollar. Dollar is showing weakness, but they all are approaching the level of resistance, all of them. So this is Australian dollar. Again, if we are to move higher, we would need to really break this recent level of resistance. The same thing of New Zealand dollar. New Zealand dollar was a strong sell-off here, and we just came back. It was a nice recovery. We came back to that point in mid-December, and since then we were taking, it looks like there were profit taking going on, and maybe on the way now to retest that level again. New Zealand dollar 0.6450, around that level. We above all the major indices. And USD CAD has been super sensitive as usual to the oil prices. So two things: if US dollar continues to be weak and the oil prices continue to go higher, we might see a sell-off in dollar CAD, and vice versa. If the dollar regains strength and oil is going to show signs of weakness, maybe on those fears on recession that will kind of trigger again the beginning of the year, we might see USD CAD continuing to the upside. So that's as far as currencies. Just want to take a look at USD ZAR. USD ZAR is also a very serious level here. I know a lot of you are trading this currency, especially customers from South Africa. We are sitting here. It looks like we're holding this level around 16.90, 16.89. And we are below. We just hit on Thursday. We hit below. We closed below the 200 moving average, but we recovered the following day. There was a Friday, the last day, and we closed above that. So it looks like the fight for this level is going on, and let's see what happens next. A lot of attempts, failed attempts, and if we don't succeed breaking down, we might see a nice impulse to the upside in dollar ZAR. And let's wrap it up with cryptos. As you know, this was a terrible year for cryptos. If you take a look, this is the weekly chart. The peak was at the end of 2021. Then the whole year of 2022 starting in March, the end of March, we pretty much falling, and then we had few attempts but still making lower lows, lower highs, and of course the NFT story added to that downtrend, and other things added to it as well. So let's see if we might get some good news about cryptos, or maybe more bad news similar to the disappearance of the money with FTX. We don't really know, but as of now, the excitement in cryptos definitely disappeared. All these crazy moves to the upside are not there, and after a lot of disappointment, a lot of customers or a lot of traders are really bailing out of cryptos. It looks like it. Now, we didn't speak about any specific stocks. As you know, we closed at the lows. There's one stock I want to bring up. That's Tesla. Tesla had a terrible year. I think it lost a lot of money per share. I think at the end of the year, Musk was talking to employees, said not employers and employees, sorry, and he was trying to calm them down and said, "Don't worry about the price of the stock," and so on. And actually, the last day or the last couple of days, we saw a little bit of a bounce. As the lowest point, I think we hit around 108. So I think the closer we were getting to 100, there was some bottom fishers buying the stock. So again, we'll see what's happening this year in the stocks. Tesla was a terrible story. And just to remind you, I think the trigger to that, the major trigger to that was the whole saga with Musk buying Twitter and refusing and then buying it again and so on. So we'll see. We're starting a new year. It's a fresh beginning. It's been an interesting 2022. We're starting with NFPs. We're starting with FOMC. And let's see how the year starts. And it's going to be definitely an interesting and dynamic year. And again, I want to wish everyone happy and healthy new year. All the best. Definitely prosperity and success in your trading. And we'll be back next week. All the best, everyone. Take care.